For those of you who are watching first thing, I'm a train wreck this fabulous morning. Okay, maybe we want to start again, maybe a little bit more cleanly. Good morning and welcome to the Construction CPA's Coffee Cafe. I am Lisa Raish. I am the Construction CPA. We are dropping the hammer on cash flow problems for contractors with outsourced accounting so you can build things that matter. And this week's topic is, drum roll, cash versus accrual. This is always a really interesting one. And the reason is we tend to have a number of clients that are going to be cash basis for tax purposes, but are running their business on the accrual basis, for the day-to-day operation. So we're going to kind of walk through what that means, what the differences are, and kind of why you kind of use one versus the other, and so on and so forth. So cash simply refers to a method that recognizes your revenue and expenses at the time the cash is received or the time the cash is paid out. That's it. Cash in, cash out. It's the simplest form to use, especially when you're just getting started, when you're getting started with your books. It's the easiest to track. Typically clients in their early days of working, if they are still doing their accounting themselves, that's what they're doing, kind of that cash in and cash out. Doesn't take into consideration anybody you invoiced or anybody that you owe money to. It's just simply the dollars in and the dollars out. Again, advantages is that it's very simple. It's a simple thing to maintain. It's the easiest, really one of the easiest ones to maintain. It's less accurate than the accrual basis in the short term. But if you're just looking, again, you're looking just to get started, it's the easiest one. As you start to work in your business longer, your business grows, you're doing more in revenues, it really becomes advantageous to move to the accrual method so that you can get a little bit more of an accurate, realistic picture of what's going on in your projects versus kind of the cash in and cash out. Because in construction, one of the biggest problems in construction is cash coming in, is the days to get paid. So for those of you that are working in spaces in the commercial space, commercial is notorious for 60, 90 plus days to get paid. So again, there's that kind of timing issue, but cash basis is cash in, cash out. It's going to paint a relatively inaccurate picture of the health of your business. But again, to start to just tracking your revenue and your expenses, it's a great way to get started, especially if you just started your construction business. It's highly probable that it's going to be inaccurate because it is only considering dollars in and dollars out. So basic example, you have an invoice sitting out there. It takes someone 60 or so days to pay you. Your vendors, your material vendors are going to want to get paid probably quicker than that. In most cases, you're going to have some type of 30 days terms with your materials vendors. So you're going to have timing issues of when your cash is going out versus when it's coming in. Same thing if you actually have employees. Your employees in most cases are going to want to get paid every week or every other week. So again, you're going to have timing differences when the cash is coming in and going out. And for that reason, it gives you a very inaccurate picture of, especially with doing job costing, a very inaccurate picture of where you are with your jobs. Because again, you could have a whole slew of expenses out the door for your jobs, but you're waiting to get paid. So accrual is really going to now you're going to recognize your income when the revenue is earned. And again, you are going to record the expense when you incur that liability. So for instance, let's just use a basic construction job. You're building a deck for someone. The day that the materials are delivered to you is when you incur that expense. You may be paying that expense 30 or some days down the road, but you incur the expense when the materials are delivered for that job. And then when that deck is built, that's when you've incurred that revenue. So one of the things that's important in accrual is kind of what they call the matching principle. We want to match our revenues with our expenses. So if I'm working on a deck this week, I want the expenses for that deck build, my materials expenses, my payroll to be in this week along with the revenue, because we finished building and we finished building that deck and we've earned that revenue. Now my customer may not have paid me right away, but I've earned that revenue. I've spent I've incurred those expenses associated with that job. And so I've matched them together so that I could actually look at the job at the end and see, okay, this is the revenue for the job, the expenses, this is the margin on the job, and this is my overall profit or loss. So again, your accrual basis is going to be more accurate, is going to give you a clearer picture of what's going on. Again, matching is incredibly important. You want to match those revenue and expenses together. It helps you with better planning, better decision-making. It's more transparent. It helps you to build out any kind of cash flow management that you need to do so you can project your cash. When is the cash coming in? When do you expect it to go out? And so on and so forth. So again, you get you a little bit more of a realistic picture of what's going on. The other thing is that it is a clearer picture of what's going on. So it is a better way to convey what's going on in your business to any outside interests. So for example, if you are looking to borrow money, a bank is going to want to see accrual financial statements, not necessarily cash basis financial statements. A disadvantage of accrual is that it can be complex. In most cases, it requires you to do some type of estimation. It doesn't reflect the cash coming in and out. So you've got to project that outside of it. And in most cases, you're going to want someone who has some level of accounting skills to actually implement the accrual basis of accounting. It's not, again, it's not this in and out. It takes a little bit more tracking, maybe a little bit more accounting bookkeeping skill, that, for instance, a new business, you're doing your own bookkeeping, you're doing your own QuickBooks file, may not be readily familiar with, and therefore you would probably want to bring somebody in who has a little bit more experience with actually implementing an accrual basis financial statements. So again, with cash, like I mentioned, it's going to be the time, it's the cash in, the cash out. Accrual, as soon as the transactions occur, that's when you are recording your revenue and your expenses. Again, you could potentially get financing with cash basis financials. It does become a little challenging. So depending on how much money you're looking to borrow, in some cases, a bank would potentially take cash basis tax returns to let you borrow money, let's just say to buy a piece of equipment, an inexpensive piece of equipment. Of course, there aren't any of those anymore, but you understand. So you may potentially be able to get away with that cash basis financials. Again, the more money you're looking to borrow, the more debt you have in your business, really, your external stakeholders are going to want to see accrual basis financial statements. For those of you that are in the commercial space, you may need some level of bonding from the insurance company. So you may need to submit accrual basis financial statements to the bonding company on an annual basis. Maybe it's a review level financial statement, or maybe you need an audit. So again, you're going to need to provide those financial statements on the accrual basis. There are going to be different factors to help you determine which one is the best for you. Cash, again, right out of the gate, just starting your business, just starting to track what's going in and out, you're probably going to use cash basis. Again, for a smaller business, a smaller or mid-sized business. And again, if you're not operating with, you're operating maybe with a lower level of receivables and payables. So if you are doing, let's just say, more of the residential type of work where you come in and you renovate someone's kitchen and, they're paying you the initial deposit. So maybe it's a third. You could potentially move or stay on a cash basis because there really is no long period of receivables, right? You're not necessarily waiting to get paid from that homeowner because the cash is coming in kind of that one third as you're moving through the project. So again, it's much more suitable for short time frame projects. So again, if it's taking you 2 weeks, 3 weeks to do someone's kitchen, that's a short time frame. What tends to happen when you accrual, if you are doing longer term projects, let's just say maybe you are in the commercial space and you are working on the construction of a larger building, and it takes a significant period of time in order to do the construction on that building, and you're on that project for a while. That's the type of thing where you're going to want to track, revenue. You want to match your revenues against your expenses. Again, if you are going to be required to remit any type of financial statements to external stakeholders, and what I mean by that is the bank, if you're borrowing a large sum of money, the insurance company, if you are required for bonding, they're going to want to see your financials on the accrual basis. The other thing is they're also going to want to see the status of your long-term projects, where you are on those projects, and so on and so forth. So again, the accrual is a much better basis to adopt if you are building out long-term strategic planning. You're looking to grow your business. You're required by various stakeholders to have it. You really want to have the accrual basis, and you want to see that true project revenue versus expenses versus, again, once you get paid. We work with a number of different clients. We work from roofers who are on and off a project in 3 days to clients who work in the commercial space, and it might be 14 months for a project to be completed. The accrual basis is going to be what we're going to use for those long-term projects, because again, they're going to extend out for a longer period of time. We may not so closely on, say for a roofer, right, who's on and off of a job within 3 days, but we still like the accrual basis because we can now match together the revenues and the expenses. Because just like anything else, one of the things we've seen, for instance, with roofing is we do have a number of clients who are doing roofing jobs that are insurance based. So like anything else, you're waiting for the insurance company to pay you. And then you may also have timing differences on when you're going to pay your vendors. So again, something to kind of think about. We find that a lot of our clients, the clients that are under 25 million in gross revenues, are cash basis for tax purposes, but we're really maintaining their books on the accrual basis. If you're looking to transition from cash to accrual, it can be a little bit of a process. It tends to be a manual process. Unfortunately, you can't just kind of flick the switch on QuickBooks and get it to convert to accrual. In many cases, you'll need to go in and do manual journal entries in order to move your books from that cash basis to accrual basis. So you would want to speak with your accountant or your CPA, get help on transitioning your books, because again, that's not something that if you just kind of change that one little, like flick that one switch, it's not necessarily going to convert it for you. So you have to do a little bit of work. So it does require a little bit of experience, a little bit of an accounting skill set in order to convert the books. So on a high level, cash basis is going to be the more simplistic way to move, is a more simplistic method to maintain your books. The accrual basis is going to take a little bit more of an accounting skill set to maintain, but it's going to give you a much more accurate picture of your books. So both of them do work. It just depends where you are in your business, what type of projects that you're doing in your business, and to choose really which one is the correct one. If any of you have any questions, you have questions about your own, whether you're doing cash basis or accrual, drop them in the chat. We'd absolutely love to hear from you. As always, we look forward to seeing you every Friday morning here on the Construction CPA's Coffee Cafe. And we look forward to seeing you next week, and have a wonderful weekend.